Thanks, Chrissy, and thanks, Jackson and the RIU team for having us back again. So my name is Michael Scanterbury. I'm a resources analyst at Euroz Hartleys, and yeah, it's a bit of a sensationalist headline, so I have to apologise for that straight off the bat. I see the media does it a fair bit these days, kind of grabbing attention, so I thought I'd just try and do the same and fill up the room with a crowd, so it seemed to have worked quite well. So last year I went with the title Energy Transition Mining Supercycle. So I believe that is, and we believe at Euroz Hartleys, that is currently playing out as we speak, and we're probably just in the foothills of the supercycle that the energy transition is kind of playing out. You know, a decade of underinvestment in the resources sector, along with the metals required to actually feed into this energy transition, is we believe is only just kicking off. And what people often forget, and what this presentation is about, is just the incentive pricing required to increase metal demand, to feed into that increased metal demand, isn't just profitable for the miners currently in the industry, but to incentivise new fresh capital to increase supply for these metals. So that's what we'll be looking to tackle from a bit of a different angle in this presentation. We'll see if there we go. Thought it wouldn't be the same coming over to Sydney without having a crack at the GST. So I was over in Sydney just a couple of weeks ago, and another sensationalist headline saying the New South Wales is to lose its AAA credit rating due to the GST shakedown. And it really just got me thinking of what really feeds into the GST and how it's actually allocated. So remember, the GST is allocated on a state's ability to raise revenue, with mining royalties, land values, property sales the main driver, and shifts in annual changes in distribution. Remember, WA has been previously dudded in the GST, with its allocation previously forecast to head down to 16 cents in the dollar for every dollar of GST raised in Western Australia. However, the floor has now been put at 75 cents. So you could probably just think of a hypothetical situation with the GST, of a potential hypothetical Australian state that ties up their resource projects in green and red tape, encourages coal-fired power stations to close down before suitable baseload power is there to replace that, making the power source of that state more reliable on gas. And then tying up gas resources in more green and red tape, and then blaming those gas suppliers for not releasing or supplying the gas at the right price, and putting price caps on them. All hypothetical kind of scenarios here. A state in Australia surely wouldn't be that crazy. And even banning onshore oil and gas exploration, you only have to look to the south for that. But yeah, I just thought it would just be an interesting kind of take on the GST. And I thought it would be pretty suitable just to flick across to see what Western Australia does with their resources industry. And we're just looking at just a few random examples in Western Australia over the time. We had the lithium market taking off in recent years. You have Pilgangoora and Altura, which is now under the house of Pilbara Minerals. A study into first production, creating jobs, royalties, and paying GST. You had the Roy Hill Hancock project. That's ramped up to over 60 million tonnes per annum now, a $10 billion Australian cost for that project. The Wheatstone project, so people might not be familiar with this, but on the west coast we export LNG as opposed to building import terminals. So it's kind of a crazy concept, but generates really good revenue for the state. And then I thought I'd just cherry pick one for New South Wales. McPhillamys, that was acquired back in 2012. I was just coming out of high school there. The asset purchased, they've drilled it out. They put out a PFS. I believe they were forecasting approvals in 2017 and first production in 2018. And here we are today, still awaiting approvals. Who would have thought? Anyway, cracking on. More sensationalist headlines. I've cherry-picked a few of these out of the last mining downturn, 2014 through 2016. It's kind of a dire state across the industry. We had Glencore was going to go broke. They were paying. There was debt concerns. Coal prices were in the doldrums. Iron ore was in the doldrums. 50,000 jobs. Will iron ore ever recover? China's blowing up, and then everything recovered and everything's hunky-dory now. But looking back, it's pretty dire. But one just caught my eye recently. It was just that just around the resources exports for energy in Australia to slump by $100 billion by the end of the decade to $300 billion. And that kind of just grabbed my attention, just more of these kind of sensationalist kind of headlines. What does that actually look like? That's the chart there, and who's actually saying it? It's the chief economist, chief Australian economist, sorry, for the federal government. So you think that, reading that, the mining industry is, it's all over, it's heading back. What does that actually assume in those numbers to have the revenue falling by $100 billion? First of all, you've got iron ore heading to $75 from its current price of 110. If I had $1 for every time I heard someone say that iron ore was going to be heading back to $75 a tonne, in the last 10 years, I'd be a very rich man. They're forecasting gold pulling back to under US $2,000 an ounce. It's currently at $2,300. You've got thermal coal heading down to $100 or under $100 a tonne by the end of the decade. It's currently trading at $150. Coking coal is going below $200 a tonne. It's currently at $250. The chief economist must have been drinking Twiggy's Kool-Aid on green steel there for that one. You've got copper staying at $9,300 a tonne. And just flat through to the end of the decade. No incentive pricing, but don't worry, we'll just increase copper supply by 30%. Just truly crazy demands for copper, but there's no forecast for incentive pricing to bring on that new supply. So that kind of got me thinking, that's just the chief economist of Australia there with those kind of pricing. But what's the rest of the market saying in terms of consensus forecasts? So I thought it'd just be worth touching on consensus price forecasts, and you're probably thinking it's not really that exciting. A whole bunch of boffins sitting in a room coming up with commodity forecasts out for 10 years, but it actually is very, very important. When we look at consensus forecasts, we're talking about up to 40 analyst and economist predictions, largely bulge brackets. So you think Macquarie, Bank of America, JP Morgan, UBS, Goldman Sachs. You get the idea. They all publish their data, and then the consensus forecast obviously is the average of those. And why does it matter? Because these price assumptions feed into analyst models, pricing forecasts, like myself, that would feed into their valuations, earnings forecasts, and it can be a key driver of equities in the market. And if you think that doesn't really matter, you can look at Liontown, for example. Look at their debt package that got pulled recently by the banks. That was just down to forecasting pricing of lithium staying lower for longer. There was a downgrade in their pricing forecast. They got their debt package pulled, and look at the share price reaction. So these consensus forecasts really are extremely important. So I thought, we were worth kicking off with copper. And just to explain the charts, we'll be running through a few of these. So you're looking at that gold line there, that's the spot copper price. And those dotted lines where it intercepts the spot copper price going forward, that's the consensus from that particular year. So as you can see, from about 2011 going forward, that was the post-GFC China stimulus. And then for about 6 or 7 years, consistent overcalling of the copper price as that overcapacity in the copper market was really worked through. And then we're almost in the opposite scenario as we speak right now. So you've got forecasts out there for how much money needs to be spent in the copper space to increase supply to feed into this energy transition. However, I just don't believe you just get this increased spending of capital without incentive pricing. So you can see forecasts out there. There's a number of them, not the consensus forecast, but just one-off people out in the market calling for $15,000 a tonne. That's the kind of incentive pricing required to draw in fresh capital from outside the resource sector to expand supply. And then another way to look at it, BHP's recent bid for Anglo American only last week. The bid was what I found was quite interesting was that there was a 19% premium over the median net asset value of Anglo American from the analysts community. So you look at that, you go, okay, that's quite interesting. Why BHP paying a premium to what the analysts are saying it's worth? The only read-through on that, or a read-through would be that they're assuming a higher copper price assumption in their models. And I'm not one to give BHP credit, but you'd hope the second largest copper producer on the planet would know a thing or two about the copper price going forward. I thought I'd just chuck in a little bonus chart, just seeing it's getting a fair bit of attention recently. So it's just the copper concentrate TCRCs versus the actual copper price. So first of all, TCRCs are the treatment refining costs, and I've inverted that on the right-hand side. So if you squint your eyes, you can kind of see an inverse relationship there, or it's correlated on that chart, given that it's inverted. So it just talks to the tightness in the copper market that we're seeing at the moment. As we've had Anglo American downgrade their copper supply. You've had Cobre First Quantum's mine in Panama gone to care and maintenance due to civil unrest. That's taken copper concentrate out of the market and created a tight market. So we're even hearing of Chinese copper smelters charging a negative TCRC. I've never heard of that. That's just to ensure that the smelter stays online. So it points to a very, very tight market in the copper concentrate market, and it bodes very well for the copper price going forward. Iron ore, you couldn't really go past iron ore, just given how meaningful it is to Western Australia. So it basically drives the Western Australian economy, as I'm sure everyone would be aware, but it also provides the federal government's handy federal government surpluses, and anyone that says that it doesn't provide the surplus is either a politician or a liar, or both. So you can look at it, and it's kind of a classic. Back to 2015, you're working through that. And you basically work through that overcapacity that was built out during the China stimulus. But essentially since then, they've undercalled the iron ore price, which I touched on before. To be fair, in 2019, you had the Brazilian tailings dams disaster, so that took a fair chunk of tonnes out of the market. So you can kind of explain that spike, and then you had the COVID reopening spike in 2020 as well. So it's quite amazing. It's consistently people calling for for the iron ore price to fall. But you look at the market now, and it actually is quite hard to come out with a bullish outlook for iron ore. You've got the Pilbara killer Simandou coming online early next year. That's looking to go to 80 million tonnes, then up to 150 million tonnes, roughly 4% of global iron ore demand to come online there. Then you've even got Onslow iron ore. So that's going to be ramping up. There should be first ore in June, and then they'll be ramping up to 60 million tonnes and beyond. So that's the Mineral Resources project out of Onslow. That's a true first real growth that we've seen in the iron ore market, basically since the large capex projects in the Pilbara have taken off. So one thing on Simandou, if you want to take a slightly bullish outlook, it's a bit grim, but in Gabon only recently had a trail derailment. So it just kind of highlights the difficulties of operating in Africa, and the concerns around supply in Africa, and the difficulties of operating there as well. Couldn't go past thermal coal. So if you can't see the date there, it's the 11th of December 2020. So they absolutely nailed the bottom of the coal price, which I'm sure you'll see soon, but I couldn't help but chuck it on a chart. So making coal history, and they absolutely nailed it. It's $50 a tonne at the time that they called that. And then, the COVID reopening, thermal coal prices absolutely took off. So I'm using the high quality Newcastle 6,000 calories a kilogram there for the coal price. And you hear a lot of people talking about energy prices. It's all Russia's fault. They've invaded Ukraine. That's why your energy prices are high. Again, probably a politician telling you that. However, you take a look back, the coal price was well over $150 a tonne, and that's as well before, that was over 2021, and that was well before the Russian invasion into Ukraine. And we're still trading that here, but yet they've still got forecasts going, still going below $100 a tonne, despite the price being right up there. So what people don't really look at, and what's kind of feeding into that negative outlook, of course, you've got coal-fired power stations getting closed down. I see the Earring plant here in New South Wales is forecast to close. The Western nations around the world are all closing their coal-fired power stations. However, the outlook actually looks quite strong if you actually just open your eyes and you look to the rest of the world. Who's buying this coal? So I thought I'd just show a bit of a chart here. If you just look at the black bars there, that's the additional Chinese coal-fired capacity added to the market. And the red line there is the global net change in coal-fired power capacity. People call coal a sunset industry. I'm not sure about you. That doesn't look that bearish to me. So they've added 50 gigawatts of, or just under, of coal-fired power capacity last year alone in China. So, just for some context, Australia has about 25 gigawatts. So they added twice Australia's coal-fired power generation in 1 year. You've got, European Union, they've got roughly just over 200 gigawatts of power. China added that in the last 4 years. So I'm not sure about everyone else, but that doesn't look that bearish. And I don't know anyone that's trying to bring on a large thermal coal mines, so the supply looks quite constrained. So yeah, it's looking pretty bullish outlook for thermal coal, if I'm honest. And then yeah, we couldn't go past gold. So gold, not going to pretend like I've got a crystal ball and it has a a real supply and demand kind of thematic to it. But it's it's an interesting one. You hear a lot of people talk to real rates and the inverse correlation with real US interest rates versus the gold price. However, that correlation, it's worked for a good 10 years. It's worked until it doesn't work. It recently broke down. The gold price is absolutely kicking off. And I think, from my point of view, I think every diversified portfolio should have a decent chunk in either physical gold or in the producers. You look at something like this, and it's basically essentially competing with the US dollar, in my view. Not calling for an end to the US dollar, but if you're an Eastern nation or someone that isn't aligned to either the US or with the East in China or Russia, I think you'd be crazy not to have your foreign reserves, at least partially invested in gold. So, I think you just got to look at the move towards a multipolar world, away from the unipolar world of the US, and it looks extremely bullish. And if you want to see a bullish chart of the gold price, which I probably should have put in, but have a look at the gold price in yen. It's truly exceptional. Uranium. So I think this one's worth touching on. You've got to hand it to the bulls of uranium that have been mocked for well over a decade. Always calling for a bull market in uranium. However, it's finally with us and we're here. So you had the Fukushima disaster in 2011, and then a continual call for prices to go higher for longer. However, it just didn't happen. And you had numerous nuclear power stations closing down, and now you got almost nuclear power stations announced every day of the week. Australia's even we'll be buying our own nuclear power stations just in the form of submarines, and I'm sure we'll be getting nuclear power shortly before that, probably with the change out in government, I would have thought. And then it's probably just worth noting that in WA we're still not allowed to mine it, but again, probably a change in government would solve that one as well, which is only a matter of time, in my view. Lithium, this is kind of the crux of it, really. So what we're looking at here, the overcapacity from the last pricing high, it was ticking off down, and no one really saw it coming. They're calling for low prices to continue going forward. Bang, the demand exceeded supply. It's absolutely taken off. Top of the market, what do? Everyone consensus calls. Everyone's like, yep, it's going to be even going higher, and it's going to stay higher for longer. What happened? Did the complete opposite, got absolutely crunched, and now we're on the back end of it. People are calling for lower prices for longer. So again, consensus forecasts are reactive and not proactive. So that's basically the point there. Forecasts are reactive and not really proactive. Higher prices lead to higher forecasts, as you saw there, and analysts upgrade their earnings forecasts. Incentive pricing is required for higher for longer to bring in that fresh capital to really increase that supply. And then you just have to. People say that it doesn't really matter. You have to just look back again to that Liontown example and how they actually got their debt. Increased supply is really there to support that energy transition, whether people like it or not. So I believe that it's not really in the consensus forecast, and I think that really lies the opportunity to invest in the resource sector. And I was told I had to give my company a plug, otherwise I would lose my job. So Euroz Hartleys, if you don't know, we're proudly a West Australian firm. We've got just over 60 wealth advisors on our desk. We have $3.5 billion of funds under management, and what we really try and do is showcase and connect high quality stories in the resource sector and industrials in Western Australia to our institutional client base on the East Coast, but obviously private wealth clients spread across Australia as well. And I thought I'd just quickly tuck into a classic case example. And this is from last year, the RIU conference, and it was a real takeaway for us. So it was Tony Rivera coming forward with his Andover lithium discovery. So just for some context, he was just drilling his first few holes, had some scrappy intercepts. He puts this slide out, 100 million tonnes of resources. And the first thing I thought to myself is bullshit. There's no way he's got 100 million tonnes sitting just outside Roeburn, outcropping mineralisation all over it. A month later, he's putting out 100-metre intercepts of lithium oxide. We're buying tens of millions of dollars of stock every single day for about a week straight, and the rest is really history. And absolutely took off. So if anyone's got an Andover-style discovery, please come and find me, and I'll buy you a beer. Thanks for listening.
Good on you, Marco.
Thank you. Thank you. Good morning. It's great to be back in Sydney. I was thinking exactly a year ago, I was in Sydney and we kicked off this repositioning of Andromeda Metals in kaolin, and it's been quite a journey, and we're here to tell you about it today and all the progress we've made, where we are, where we're going, and what the opportunity is. So I wanted to first recognize the traditional custodians on whose land we're gathered here today, the Gadigal people, the Eora Nation, Ghana people in Adelaide Plains as well, Wirangu people of South Australia's Eyre Peninsula, which is where our mine is located. We pay our respects to their elders past and present, and extend their respect to other Aboriginal and Torres Strait Islander peoples who are present here today. So let me tell you about Andromeda, right? It's three key things I want to talk about today: the project, the market, and our strategy, right? So the project itself is very unique. It's uniquely located in the Eyre Peninsula. It is an industrial mineral called kaolin that has unique properties, of which right now, globally speaking, you can't find a kaolin with that chemistry, that quality, and that color for the applications in high-end ceramic tiles and porcelain tiles. We'll talk about that a little bit later. Market, significant market, large, growing. One of the big dislocators in the market globally is the situation in Ukraine. Ukraine, on the Donbass side of that country, had at one time the largest industrial mineral kaolin deposits, especially the high-end ones, that served the Mediterranean and Spanish markets. This is where the majority of the high-end formulations are made and then distributed globally. So really interesting opportunity for us, really interesting long-term trend, both in terms of demand and very, very steady CPI price growth for the last 30 years. The strategy, really, it's a value and use-based strategy. We're not a commodity. We are positioning our product for the best value in the best end uses with the best customers. We're looking for growth, and we're looking for customers that need that type of value, be it in ceramic tiles, frits and glazes, or porcelain tableware. So that's a really important piece. We just announced yesterday that we're actually upping the first stage of production to 100,000 tons based on market demand, and I'll tell you a little bit about that later in the presentation. So we've divided the project into three stages, right? We just want to make sure we actually incrementally address and keep that value and use in the segment as it goes. First stage is 100,000 tons. That 100,000 tons goes through a 10-month ramp up to 55, then 17 months to 100. That allows us to stage the origination work, all the testing, everything that needs to be done. A lot of that piece is just about wrapped up in terms of offtakes, book building, and partnerships. So we're very excited about that. We have a second phase and a third phase that look very, very good on the back of pricing that we've been able to test and secure in the first phase. We'll see what that looks like going forward. I think that looks very, very positive, and demand looks very, very strong for both phases going forward as well. The economics are very strong. This is really based on the pricing that we've presented in our DFS, which actually wraps up the first three phases. And this is really based on the ceramic porcelain segment only. We have significant upside in cement and concrete, zircon, frit and glazes that we don't have in these numbers yet. That represents a significant upside to the project going forward. For many of you that don't know where we are, we're out on the Eyre Peninsula. It's a beautiful part of the world, very, of course, known for oysters, tuna, and kaolin now. So we're very excited to be there. We have great partners, great communities, and great people. So what does our commercial profile look like? You know, we've worked very hard in the last 12 months to reposition our business with a clear, clean, crisp focus on the segment that gives us the best value and use, and that is the high-end ceramic porcelain tile business. These are the large porcelain tiles that are very, very high-end and now representing and replacing granite, stone, marble countertops as more and more crystallo-silica regulation goes in. So a great opportunity for porcelain tiles to replace dimensional stone, and a great opportunity to introduce our kaolin into that application. For many of you that live here in Sydney, I think probably one of the best showrooms in the world representing the best high-end porcelain tile producer is right here in Alexandria. If you want to go visit the Earp Brothers and see what a high-end porcelain tile looks like, it's pure art, it's beautiful, and it's awfully expensive. But it's right here, and imagine the day when we'll have our kaolin both on top of that tile and inside that tile. A lot of discussion on price. You know, people say, hey, what about price? How can we really identify what is happening price, the value that you're talking about? What is value in use? Well, if you look at the graph here, that value in use of the high-end kaolins is that gray bar. And that gray bar can go anywhere from $300 to $800 a ton, depending on the segment that you're playing in, depending on the value you're presenting into that segment. You can have very, very high-end paint segments commanding $800 plus. You can have low-end paper segments that are, much, much lower, and you can have the segment that we're in, which is sort of, that first third of that gray zone bar and potentially growing. So we're very happy to identify that, and very happy to have partners that understand that. I talked a little bit before about pricing. You can see the 30-year pricing, the U.S. exports linked to CPI. In real terms, $19.99, good, steady price growth on those numbers. You can also see the global demand forecast for the segment that we're talking about compared to the rest of the kaolin market and compared to traditional GDP. So we're seeing above GDP growth for the segment. We're seeing above CPI growth for price. It's just really identifying the right market to mine opportunities with the mine to market potential we have in the deposit in the Eyre Peninsula. And we've been able to marry that, pull that together this year, and we know exactly where we want to play, with whom, and why. So, what is a high quality kaolin, right? There's chemistry. We have probably amongst the best aluminum iron ratios in the world. There's color. We have an L value that when you fire our kaolin gives you a 97 color. I mean, that's extraordinary. It's so extraordinary that there's a lot of development work going on currently to see if we can actually replace zircon, 10 to 15% zircon in a tile body. Many of you know that zircon sells at $2,300 to $2,500 per ton, euros per ton, I should say. So an excellent opportunity there, and that's in development. We have low iron in our deposit, which makes it the deposit ideal for porcelain tableware. The great English bone china, made in Japan, made in the UK, ideal market for us as well. And we have fantastic mechanical strength. That's important when you're making a large tile and you haven't fired it yet. You don't want that tile to fall apart, especially if you're producing it continuously. So, we look at our current products. We've talked about tiles, we've talked about porcelain tiles, and we've talked about porcelain tableware. Really a unique product for those applications. But we have some really exciting development work going on that are complementary to our core business. We mentioned zircon replacement. This is currently under evaluation, so this will allow us to blend off 10 to 15% with the zircon millers and the people who produce zircon flour. That goes into tiles, that goes into a wide range of applications, mostly as opacifiers. So that's an application that's actually in advanced development. And we have a very other interesting application based on the rheology of our kaolin. And that is to really be a key element in decarbonizing cement and concrete in that application there. We're working with the Hallett Group in South Australia to develop applications where you can use less cement by using our product to create the same concrete strength in unique applications related to the building sector, transport sector, and the mining sector. And that work is advancing. It's very unique because it's a very unique application for that product. That same rheology modification that we have in cement and concrete also allows us to be a unique additive in frits and glazes, which is what is put on top of a ceramic tile. So a lot of interesting development work. A lot of the work we've done, both for ceramic tiles and for the ceramic porcelain has been done with the Technical Institute of the University of Castellón in Spain. They have verified our work. They have pulled together the key elements that establish the value in use, and that's the work we're taking into the marketplace and securing the premiums to the market that we've been able to pull together for the project. So very, very exciting time. So, we look at where we were sort of about a year ago, and we look at world-class, when we benchmark ourselves against world-class industrial minerals companies, especially in this sector. I mean, there are two sets of, value drivers. There's a value driver that you need for your project, and there are value drivers that you need to create additional value for industrial minerals, especially when you don't have the benefit of LME or CME as a backstop. You have no other opportunity to sell your product except your own ability to establish its value in the end use that you're selling in. So if you can see here, a lot of the work that we've done, both from a people standpoint, product standpoint, financial standpoint, the development, the way we've pulled the project together, the way we've staged it and restaged it now for 100,000 tons, going up to 300,000 tons, extremely capital efficient, excellent NPV, excellent returns, but more importantly, it places the product exactly in the markets we want at the time when those markets are growing significantly higher than GDP, and in the markets that also are in clear demand for products that are replacing dimensional stone globally, not only Australia, but we expect to see the same type of legislation and regulation across the US and ultimately across Southeast Asia and China. So a big piece of what is happening there. Last two pieces that are in front of us, we have the new products that we just talked about. We have a final piece of important book building going on with our partner Traxys. Traxys is a top 5 trading company globally. They are a partner that we're working with globally to build a book based on our products, based on their expertise in ceramics, both in India and across the world. That's going very, very well, and the teams are working towards a final conclusion on a binding marketing and offtake agreement that would really pull us together as partners and hopefully make us the suppliers of choice into the segments that we want, notably ceramic tiles and porcelain tableware. So that's our team. Many of you know that I've been with Andromeda for a little over a year. I'll be heading back to Europe in August. Luke will be taking over as CEO. We're thrilled to have Luke Anderson join us. He's from a team representing old friends at Uniman that we used to work together in the US. So he's from South Australia, and he'll be taking over. So we're excited to have him as part of our team. Great experience, and I'll be staying on with the company as an advisor and looking forward to seeing our products in the best ceramic, large format porcelain tiles in the best markets. And if you guys get a chance to go down and see them, see some of those products at the Herb showroom, please do so. Don't bring your spouse or partner. It'll cost you a lot of money. But anyhow, all the very best. So thank you very much. Great to be here. Thanks for your attention, and thank you for your support. Thanks.
Yeah, thank you everyone. My name's Andrew Ferrier. I'm the Managing Director of Global Uranium, and that's a great way to set up this presentation, is how do you capitalise on everything that's happening in the uranium industry. That graph before was a great demonstration of why the market's in such a great place at the moment. Uranium was fundamentally uninvestable for 10 years. The world has completely changed its thinking to nuclear energy, building reactors, globally every day, and there's just no supply to keep up for it. So we're perfectly positioned with development assets to take advantage of that moving forward. So what is Global Uranium? We're very focused on North America, and there's a good reason for that. We have 3 projects in the US. Our Tallahassee project in Colorado is one of the largest undeveloped uranium projects in the US. We have a JORC-compliant resource there of 50 million pounds. We'll be drilling on that project in the next couple of days. There's kick-off meetings at site today. Very excited about that. We've got a very clear program over the next 6 months, but over the next 2 to 3 years to advance that project. We're well funded. We have $6.2 million in the bank. We have all the money we need to advance all our projects over the next 12 months. We have other projects in Colorado called Maybell, which we'll also be drilling on this year. We have 6 projects in the Athabasca Basin, which we hold pretty tightly and pretty happy to have them in the portfolio. On top of that, we've also invested in a company called Uberian, which is focused on enrichment, an incredibly exciting part of the nuclear fuel cycle at the moment. We're the largest shareholder in that company. It continues to advance that technology down at Ansto here in Sydney. All that in a backdrop of the US just banning Russian uranium. So it's the right time now to invest in this company, and I'll walk you through our assets. But before we go into that, just one slide on the macro. The uranium price has obviously ticked up very strongly over the last 12 months, taking a slight breather at the moment, but just it's set up to continue to run. It has to continue to run. The incentive price for all these projects to fill the demand of new nuclear reactors means that the uranium price is going to have to be well north of 120, 130 US dollars per pound. Currently sits at $90 a pound. We expect that to go up over the next 6 months. Why do we want to be in the US? I think the graph in the bottom left demonstrates it well. US has more nuclear reactors than any other country, 92, 93 operating reactors today. It's 20% of all their energy. 20% of the world's biggest economy is a big number. It currently is completely reliant on imports. A lot of that comes via Russia. Literally last week, the Senate banned and put provisions in to ban Russian uranium, particularly enriched uranium, coming into the US, and put limits on that for the next couple of years, and then a flat-out ban after that. That's going to set up very well for people obviously coming into production now, but also for companies like ourselves with big projects in the US that are going to be developed over the coming years. Importantly, that legislation also triggered $2.7 billion of funding in the US to secure their domestic supply chain of nuclear energy. This is now bipartisan in the US. The Democrats are completely on board for nuclear energy. They now understand that it's the only clean baseload power way of having baseload power in the US. So it's full steam ahead in the US, and I'll talk to you how we're going to take advantage of that. This is a snapshot of our projects in North America. The first project I'll be talking about is Tallahassee. We also have Maybell. They're both in Colorado. We have our Rattler project in Utah as well. We'll be drilling at Tallahassee and Maybell this year. We'll be putting out a scoping study on Tallahassee Q3 this year as well. And then you can see the Athabasca project in northern Saskatchewan there as well. So what is Tallahassee? I'll say it again, it's 50 million pounds. We currently have 50 million pounds. The whole district's close to 100 million pounds, one of the largest undeveloped projects in the US. There's over 2,000 existing drill holes of data, 350 kilometres of actual drilling. Cyprus in the 1970s got a full-blown mine permit to mine out the Hanson deposit as an open-pit underground project, which gives you a bit of a sense of the strength of the shallow, high-grade nature of the ore body. We're blessed with all that data. We're going in there now and doing a relatively small core drill program. We don't need to make this project bigger. It's got critical mass. We're doing a small core program to get to do some metallurgical test work on the project. We're going to take that test work, put it into a scoping study, and so the market really understands the merits of this project come Q3. Very excited to have this project. We want to continue to build off it. We think this is unique in the sense of the US requires 50 million pounds of uranium a year. It's currently sourcing that all from abroad. It needs projects of scale to fill that void. This is one of these projects. We have all the permits we need for the next 3 years here. We have our exploration permits in hand. We got them all last year. This is private lands, private minerals, makes it relatively unique for if you're invested in other projects which are either on federal or state land or US Forest Services as well. So this is an excellent project we're going to be running very hard at over the next 6 to 12 months. Our Maybell project, also in Colorado, we picked up this project ourselves through staking. It's an interesting project, produced over 5 million pounds in the past, very high grade. We've gone and collected a huge amount of data on this project as well. Couldn't believe what we saw in terms of how much high-grade shallow mineralisation was left from the old timers. But basically it's what happened on all projects. The uranium price drops out, they essentially walk away from the project. We spent the last 12 months compiling all this data. We're really keen to get out there and drill it. We put out an exploration target late last year. We think there's 5 to 10 million pounds of really shallow, high-grade material here. You can see the existing pits there. You can see the amount of drilling, hopefully, that's around those pits. And so we're very blessed with that data as well. But we're going to get out here, drill this project come August. We'll be drilling out there for a couple of months. We're going to turn that exploration target, hopefully, into a maiden resource on the project. We're also going to test some deeper mineralisation as well. Some of the historical data has actually talked about 50 to 100 million pounds of uranium in a lower formation, slightly lower grade, but again, in the current uranium environment, that could be a very, very interesting project for us moving forward. So we'll be very busy on Maybell. Athabasca, we've got 6 projects here. We've got 60,000 hectares of projects. We picked these up 2 years ago before the rush into the basin. The whole basin now is staked. Everyone's gone in. Everyone's picked up their projects. We're blessed with great projects. Our Noonan and Perch projects, which you can see up there in the top right, or the northeast of the basin. We've got an existing permit on, good relationships with the First Nations. Done a whole bunch of airborne work on that project in the last 12 months, have 10 to 12 walk-up exploration targets. It's shallow drilling. It's 100, 150 metres into the basement rock is what we're looking for. So it's a unique project. We don't currently plan on drilling that project this North American summer, so I think May, June, July, but I think we're pretty excited about moving these projects forward. We continue to hold them, and we'll all see where that takes us. On to Uberian. This is different, this is unique, this is pretty special. We invested in this company 12 months ago. We're the largest shareholder. Uberian is in the chemical enrichment space. It's a technology company. It's been around for the last 5 to 6 years. The technology has been classified by the Australian government. It continues to advance and develop that technology here in Australia, down at ANSO, down at Lucas Heights, here in southern Sydney. It is very unique chemical enrichment. Existing enrichment techniques are done in very different ways. All modern enrichment is done through centrifuges. Silex, which most people know about, is very interesting technology, which is through laser technology, essentially. This is chemical enrichment, which has been known about for a long time. The Japanese and the French spent a lot of money looking into chemical enrichment in the 1970s. Uberian are getting a lot better results than those previous companies did back in the 1970s, and we continue to support the company in what is an incredibly fascinating space in terms of enrichment. When the US talks about securing the nuclear supply chain, they're really talking about enrichment. Nearly all their enriched uranium comes out of Russia. They have one facility in New Mexico, owned by Urenco, but outside of that, really need to build out the enrichment capacity in the Western world, and that's what a lot of money is going to be thrown at over the next, straight away. So Uberian's obviously a pretty important part of that, and we continue to progress that, work with that company and progress it over the next couple of months, 6 to 12 months. But it's all a very exciting landscape. What's our market cap today? $30 million. We've got $6 million in the kitty. So all those projects I explained to you, all that work we're going to be doing sits in a company with an EV of Aussie $24 million today. We think that's obviously going to re-rate pretty strongly as we get out, announce we're drilling in the coming days, get out the scoping study, working on Maybell. We're also looking to grow this company very rapidly. We know what we're doing in the US. Myself and Jim Villeneuve, who's on the next slide here, we've permitted uranium mines in the US before. It's not many companies or people that have done that over the last 10 years. So we know what we're doing in the US. We've got a small but experienced team of professionals in the US that are advancing these projects. And we've got a pretty clear direction from the board to continue to grow this company. So we're looking at that pretty aggressively, but also really like the portfolio of assets we have today. That pretty much sums up the story. We can go through it in more detail, but in very simple terms, the macro environment for uranium has honestly never been better. A completely unloved sector for 10 years. The world's woken up, realised that nuclear is clean baseload power. On top of that, you've got all the energy security concerns that the US has. They're going to remedy them through throwing money at the issue. We're well positioned. We've got a large undeveloped uranium project, one of the largest undeveloped uranium projects in the US. We also have Maybell, which was a high-grade existing producer in the past. We have a team that knows what it's doing, and we've got cash in the bank. So I think we're well set up. I look forward to putting out the news flow over the next 3 to 6 months, and appreciate the opportunity to speak at this conference. So thank you, everyone.
Thank you very much, and thank you very much for the opportunity to present Industrial Minerals to you this morning. Yes, my name's Jeff Sweet, Managing Director of Industrial Minerals, and yes, we're in the space of silica, which is an essential component in a lot of products and the like across the whole electronics and other industries. As I said, we're high purity quartz, high purity silica sand explorer and developer. We've got projects across Western Australia with, you know, from an early stage we've been exploring silica sand, and that's taken us through the, I guess the market into China, where the demand is large for the general glass industry, but more specifically the low iron, high purity silica sand for the solar PV market. I guess during our time over there, we've developed the insight into the market further into the high purity quartz as well. So, you know, which has led us to do further exploration across our tenements in the Pilbara region of the northwest. And in which case we've identified and targeting further opportunities for the high purity quartz up that way. Last year we acquired the mineral rights to a Pipingara quarry operation just out of Port Hedland, with the intention of exploring the historical drill data that was available on site that identified extensive quartz mineralisation across the project, which was historically mined for feldspar and mica. It was a pegmatite-hosted body, and also had some historical lithium exploration as well. Yeah, so as mentioned, you know, we're explorer and developer. Being in industrial minerals, bulk commodities, so we're generally aiming at being close to key infrastructure, including ports for direct shipment across to the end market, being Southeast Asia and generally China more specifically. You know, heavily leveraged to the solar PV market and the electronics industry. And we have several projects that are advanced and sitting on active mining leases, which give us the ability to progress them through to production in the short term. Led by an experienced team, I'll quickly run past that. You know, we're tightly held with a very supportive shareholding group, and key management are well invested in the company. We've recently appointed Ms. Eileen Ho as GM of Sales, Marketing and BD, and she brings in extensive experience in the industrial minerals space and is a key addition to the industrial minerals team. Really the end applications for our silica and quartz are predominantly the electronics and PV area markets. And that can range from the lower grade products for glass, PV glass, through to the high-end applications for inputs into the manufacturing of silicon chips and the equipment used for those processes as well. But essentially, silica is across so many different applications and uses and products throughout the modern world. The market size and growth is well supportive for both the silica and the quartz as well, with I guess key drivers being the steady increase in electronic consumer uses and the PV, the drive for further PV applications and installation. Australia itself is definitely keenly invested in the growth in the PV market, both from a installation and a manufacturing point of view. And China is one of the again one of the largest importers of high purity quartz, as they don't generally have a suitable source internally. Across the high purity space, there's been plenty of investment in the industry, with I guess one of the major high purity quartz suppliers being Sibelco, with the Spruce Pine mine in the United States being one of the I guess the premium suppliers of ultra high purity quartz. There's been several deals where they've locked up long-term offtake to the value of 350 million US, and as such they're investing large amounts into upgrading their production capacity. From a sales point of view, I guess the market price is typical for an industrial mineral. It's quite opaque. Speaking to various groups at conferences and through our marketing activities to date, from the lower range PV glass, we're looking at below 100 US per tonne, and if you take it through to the high value products, it's well in advance of 4,000 US per tonne for the if you can achieve around the 4959 specification, which is as mentioned very unique, and only a handful of companies are currently meeting that from natural quartz sources. We've got three main high purity quartz projects in Western Australia: the Pipingara project, Karratha and Muckenwooden, which was recently acquired east of Perth. As mentioned, Pipingara is a project that we acquired the rights to late last year. We commenced a drilling program to test the lithium potential in the project and define the historical quartz intersects, and that's from that point of view, we've then we'll continue on to do some further drilling to work towards a mineral resource estimate. The quarry operation itself is a fully active mine site with all infrastructure in place, including mining, crushing, camp facilities, workshop facilities. So in terms of being in a position to take this through to production, it's pending offtake. This is a very easy mine to kick off. It's located very close to the port of Port Hedland, allowing cheap logistics through to the shipping stream as well. At this point in time, we've defined a exploration target of approximately 1.5 to 3 million tonne just from the drilled area that was completed late last year. But further to that, there's extensive quartz outcropping across the whole mining lease that is yet to be drilled and tested. There is some historical drill holes that provide us with confidence that there's thick bands of similar high purity quartz to define. So far, we've sent off several samples to potential offtake buyers, and some results have come back with test work earlier this year achieving 99.994% purity, which is a fantastic starting point for a high purity quartz product. We'll continue to work with offtake partners and more importantly as well, third-party laboratories both within Australia and we're also dealing with the North Carolina State University, which has been testing the high purity quartz of spruce pine for decades and obviously well versed in that space. We've also done some trial crushing and screening processes for providing bulk samples to potential buyers as well, and so far one 24-tonne sample's been sent off with feedback and results pending. The same operator that was operating Pepingara also operated the Muckenbudden quartz feldspar mine roughly 300 kilometres east of Perth. Again, it was just predominantly historically mined for feldspar, but also was early stage. It was mining quartz for to be sent into the Japanese optical and electronic industries back in the 1970s. So far, a review of the historical drilling data has indicated extensive quartz mineralisation from surface and in and around the existing pits. Not to mention, byproduct that's been deposited in the waste dump from the feldspar mining operations as well. The pegmatite hosted quartz is somewhat targeted for their purity, so both Pepingara and Muckenbudden are well positioned for the potential to meet those higher purity specifications, and a starting point for a high purity ore is essentially going to be in the higher 99.9 range. So both Muckenbudden and Pepingara have that starting range for the pure ore samples. The project's previous owner, Metz Engineering, had also done an amount of metallurgical processing test work and studies, and we will continue to review that work and look at the options for further processing and pilot stage test work both here and elsewhere. And the other upside potential for both Pepingara and Muckenbudden is the potential for co-products, being the feldspar and potentially the mica, depending on the consistency and the scale. The beneficiation pathway for the quartz is essentially there's potential to do DSO, crush, screen, ore sort at the mine and ship in a DSO state to offtake partners at the end market, or take that through to doing the physical processing on site, and I guess the economics will be determined as the test work proves up the ore's purity and the best path to end product, whether it's DSO and ship it to the market to do final processing and beneficiation, or whether that's done within country. But further studies will determine that as we progress. Prior to as mentioned, prior to pursuing the high purity quartz, industrial minerals has been heavily advanced in the high purity silica sand space with a with the advanced stockyard project to south of the Port of Geraldton. We have extensive other tenure throughout the whole southwest, and are continuing to explore and assess the viability of those various projects as well. But the strategy that we went down originally with the silica sand and somewhat to the quartz as well is aiming to do low impacts on the local environment. So we've generally targeted cleared farmland. We've had continuous good relationships with the property owners that we're dealing with, and the stockyard project has been taken through to a mineral resource estimate of just under 10 million tonnes of silica sand suitable to be processed through to the PV solar grade market. Yes, as well as stockyard, a number of projects in the south being around Albany and Esperance are also producing a superior grade, and project economics are favourable in the fact that they're closer to the local ports as well. So the key takeaways, I guess, silica is essential to the the modern world. It's in so many applications. The high-end electronics demand is ever growing as everyone has a phone and another device through their lives. And the PV solar market is continuing to grow as well with the push to the green energy. We have. We're a team that has the ability to take these projects through to production. We've got some well-advanced projects that can be we can act on in a short time. And I guess the key to taking this forward is really developing that market input and finding our true purity of the quartz that we're developing. Yeah, thank you very much for your time.
Welcome.
Thanks, Chrissy, and good morning, everyone. Thanks for coming along and listening to an update on the Caspian story, or for those of you who are unfamiliar, an introduction to our company, which is proudly a grassroots exploration company. We are unashamedly into base and precious metals. Some of those are quite out of favour at the moment, including nickel. Chrissy, I was really disappointed that Michael Scanterbury didn't even talk about nickel this morning. That's how unpopular it is. But I guess from my perspective as an explorationist, what we recognise is that a good exploration discovery transcends markets. And so what does that mean? Well, for those that can remember, Sirius back in 2012 made the Nova discovery in what was pretty much a down market, and then eventually sold their company to IGO 4 years later for $1.5 billion at what was the bottom of the nickel market. And so I think that's really important to recognise that even though these sort of times are difficult in that sort of base metal sector, copper is good, but nickel is challenging. There's still great opportunities for companies like us to create some shareholder value. And I guess to reduce the risk on that, we're in some strategic areas, out in some new frontier terrains, and we're out there looking for big discoveries, and we've got some interesting news that's sort of in the pipe that Chrissy alluded to. Corporate slide, not much has changed here. Really, I guess in the last 12 months we've got a slightly more streamlined board, but I guess the difference now is that the value proposition has changed. It's a great time to be investing in junior stocks that are out there having a crack and having a punt on new discoveries. So 2 projects, the Yarrawinda Brook project and the Mount Squires project, 2 very different terrains, but essentially the same sort of geological systems that we're exploring for here: magmatic sulphide, nickel, copper, PGE systems. We do dabble in a few other bits and pieces. We do have some gold prospectivity. Rare earths is something that we talked about a lot last year. We'll go into that in a bit more detail, and we even dabble in a little bit of lithium as well. Now, I thought today we'd start on our Mount Squires project because this is really pretty much what we led with last year on the back of what was an interesting sort of rare earth discovery. We're out here primarily for new discoveries like the Nebo-Babel deposit just across the tenement boundary in BHP's ground. They obviously the big landholder out there building the Nebo-Babel mine, $1.7 billion worth of development. But really, there's something out there for everybody. Nickel, copper. There's also some gold prospectivity on our tenement. But and more recently, through our exploration efforts, we've recognised rare earth mineralisation as well. A first for the region and a really interesting discovery that could add quite a lot of value. So the nickel sulphide is really nickel copper sulphide is really the main game here. Nebo-Babel mine, 10 kilometres from our tenement boundary. There's mineralisation even closer. The One Tree Hill prospect on the BHP side of the tenement, only 200 metres from our tenement boundary. Pretty handy sort of grades of mineralisation. They're 40 metres of a percent copper. Admittedly reasonably deep, but it's open on towards the near surface, and that might be projecting towards what we call our Redwood prospect, where we have seen some indications of copper. We did some drilling out here last year on the Sienna and Auburn prospects, RC drilling, following some of our earlier stage geochemical sampling. Recognised the right kind of rocks, magmatic sulphide mineralisation, albeit just traces, but it gives us confidence that we're in the right part of the world. There is some copper mineralisation at surface at Sienna. Quite unusual because as you saw in the video, we're in a desert terrain, there's a lot of sand cover, and it obscures a lot of the basement rocks. So, I guess what we've seen so far is positive, that we know that we're working in the right part of the world and in the right kind of systems. Now, I guess what we recognise though is that it's still quite a large area, a large area to explore, and probably the missing piece in terms of data sets is gravity, and so gravity surveying is useful for measuring the different densities of rocks. So the magmatic intrusives that we're looking for are naturally more dense than the surrounding felsic rocks that they've intruded into. And so they show up as kind of blips. Now, subtle blips, but blips nonetheless. And what the work that's been done out there in the past is okay, and it's sort of we've been able to sort of use it to an extent, and we can recognise, as you can see in the image, there's a slight sort of elevation through that Sienna Auburn area, and they're kind of equivalent to it's got the same sort of characteristics as what the Nebo-Babel intrusions have, and we've recognised that one of these sort of blips is what we now call Sharon Prospect, and it hasn't received any kind of attention whatsoever, no exploration, and that's partly because it's in an area where there's paleochannel coverage. That's where the surface cover is even thicker than the usual desert sands, and so it obscures the geochemical responses over that area. So you've got to use other tools, and we think that gravity is the key. And so we're quite grateful that the WA government has awarded us co-funding in their geophysics program. This is a new initiative, and I commend WA government, the GSWA, for going down this path. Co-funding these sort of geophysical surveys in greenfields terrain, so that they'll spend half of they'll fund half of the cost of the program, so minimising the risk for shareholders, and it's a great initiative, and so that'll be part of our programs for this coming field season. Meanwhile, the other bit of news is that we've done a deal on the rare earth mineralisation that we discovered last year, which is almost 12 months ago to the day. The first rare earth discovery in this part of the world at a prospect that we call Duchess. Quite significant grades of mineralisation, over 20 metres there of rare earths, including what's most important is a high proportion of the heavy rare earths, so dysprosium and terbium. They're the keys really to the rare earth market. We've done a bit of prospecting through the project area and recognise that there's plenty of more potential for rare earth mineralisation across the project area. But I guess what we also recognise is that the rare earth space is quite a difficult area for the juniors to operate in. It's a challenging processing route, and it's challenging getting your product to market. Much more complex than gold and even nickel and copper. So we're really proud to be partnering with ASM, Australian Strategic Materials. Some of you may know that they are developing the Dubbo project here in New South Wales. Obviously, huge amount of skills and experience in this area, and we think that they're a great partner to work with to try and evaluate the economic potential of this discovery. And I think that's what sets this project apart from its peers. You know, there's a plethora of rare earth projects out there, but I think we've just taken that step above. It should provide investors with confidence that this is a rare earth project with some merit. So ASM are going to undertake some metallurgical test work on this using some of their IP and obviously years and years of understanding of this market, and we'll see how that evolves, and hopefully that we can, if successful, that will lead into a drill program later on in the field season. And so let's just touch quickly on our Yarrawinda Brook project. Well, I was going to say the second project, but no, it's not the second project. I love all my children equally. Just north of Perth, brought to fame, I guess, by the Chalice discovery at Gonaville. There's been a lot of commentary around that discovery in recent times. I think what we're out here now, or what the region really needs, is a high-grade discovery. So, a high-grade massive sulphide. That's what's kind of missing it. Really, I guess, in the region to really get people excited again. Gonaville itself does have a high-grade core. The original discovery was actually massive sulphide. We think there's fantastic potential for further massive sulphide discoveries in this region. We know that it's got the scale, to host world-class discoveries. What we really need is the high grade. And so we've turned our attention back towards massive sulphide exploration, utilising EM techniques. And we're focused in on an area that we call Bresca. It's essentially, as you can see there, it's a long strike. It's the same package of rocks north of Gonaville, north of the Julmar project. Interesting sort of geometry there. At Bresca, it's got a sort of an intrusive look to it. So we've just recently undertaken a moving loop survey through here, and sure enough, we've identified two really interesting conductors. Now that's great, but what gives us even more confidence is that some of the historical exploration going back into the 70s and 80s, very shallow sort of drilling through this area, actually looking for nickel copper PGEs, does actually have some indications of mineralisation close to surface. And so I guess that from an exploration point of view, that's what we were looking for. We're looking to reduce the risk in our programs. And so when you get complementary independent data sets that all point towards what you're looking for, that gives you a lot more confidence in what you're doing. And so just for disclosure, you can see there we've got 3 plates. The third plate on the southern end is actually a false positive, or not so much a false positive, but it's a sulphide body. But because of where it sits in the geology, we know that it's not in the right host rocks, and therefore it's probably not likely to be the sort of thing that we're looking for. And again, shout out to the WA government for helping us out with co-funding our drilling campaign to test those 2 conductors later on in the year. So we're looking forward to that. Now, there are still other targets within the project area. A lot of this area hasn't actually had any exploration to date. It's been held up by farming, so land access issues and whatnot. So it has been challenging for previous explorers. Hard to believe that some of this area, so close to Perth, in a well understood kind of area, hasn't had any sort of modern exploration. We've got some other, well, we've already defined quite a lot of mineralisation at Serradella. There's some interesting EM plates along strike they're also looking forward to testing in due course as well. And then beneath that is a pipeline of other earlier stage targets that are gradually being worked up towards drill testing such as Balanza. And we're still trying to gain access to other parts of the project area to even conduct those first early stage geochemical testing. And like I said, we also dabble in other things. Lithium is kind of interesting. I'm not too concerned about the fact that the lithium market is off at the moment. I think it's typical of immature or immature markets that are still sort of working themselves out. Really interesting sort of pathfinder anomaly. So what we've been able to do is take our existing data and look at it through a slightly different lens. You know, we analyse for 40-odd elements in our geochemical sampling. So we're looking for the pathfinders to lithium, because lithium itself is actually not really useful from a direct targeting point of view. You're looking for tin, tantalum, cesium, tungsten, those sort of elements. And sure enough, we are seeing some interesting sort of anomalies within our data set. We don't think we've necessarily explored the best of it. You know, we've been doing the work more in the ultramafic rocks, and what we really want to be looking for is probably in the sedimentary felsic rocks nearby. But encouraging nonetheless. And the reason we're doing this is because I think, despite all the focus on lithium in the Pilbara, you know, and out in the goldfields, the biggest lithium mine of them all is Greenbushes, the granddaddy really, in the southwest, and it's the only one, which to my thinking is just very unlikely. So I think there's still great potential in the southwest for further lithium discoveries, and our friends Tambora, who are here, they've got a booth just down a couple of doors from ours, have actually got SQM in a joint venture, and they're actually out there drilling for lithium right next door as we speak. So I think that's something else to look forward to. So, ladies and gentlemen, I think that's a pretty good snapshot of where Caspian is at this point in time. I think we're an interesting kind of story. I think we're a great value proposition, and look forward to giving you another update in 12 months' time. Thank you.
Okay, usual disclaimers. Make good bedtime reading. I recommend them. Okay, so TG Metals is coming up for our 2-year anniversary since listing. In that time, we've only had one other capital raising, and that was on the back of the Burmeister discovery last year. Since then, we've been pretty well hammered in the market coming into post-December. Today we have a market cap of around 20 million after a boost yesterday, but that's still probably the cheapest lithium stock on the ASX that actually has a deposit, not just rock chips and a couple of drill holes, actual deposit. Our top 50 shareholders have stuck with us right through from listing through to today. Directors and management have a fair slice as well. And we have a very strong board with great experience industry-wide, and as coming into it too, we've also got a bit of marketing experience there too, which will come in handy as we develop our new discovery. So this is our only deposit. Our only project is Lake Johnson project in the region. We're not an orphan around the area for lithium. So there's 4 operating lithium mines around us to the west, to the east, and to the south. We're close to the Esperance port, which is always good. You need a path to market in anything that you are exploring for and developing. We have the dominant land position in Lake Johnson, and we also believe that we've got the best land as well in terms of lithium exploration. Burmeister lithium deposit. It's the largest deposit in the belt. There are others, but ours is the largest, and we hope to capitalise that further as well. We've got more prospects to explore. This is turning out to be an area with proven lithium endowment and an emerging province. So onto a Burmeister lithium pegmatite deposit. So just last week we released our exploration target statement for the Burmeister lithium deposit. This was basically to give investors an idea of the size. We knew internally how big it was, but externally we were getting a lot of chatter around, you know, it's too thin, it's too deep, it's too small, it's a stranded deposit. But as you can see, it's a potential standalone. This is, we've got between 15 and 20 million tonnes, 0.97 to 1.19, and we believe that we can easily achieve the 20 million tonne high range target. The main deposit's 1,500 metres in strike length and 800 metres wide. It's not going to be a small pit, it's going to be a big pit. A lot of work went into this. We basically treated it as if it was a resource model. It's based on drilling, and drilling that's done very recently. There's no historical drilling in this at all. And also we got some conceptual pit shells done, and that was also based on real data as well. So we used the Mount Cattlin expansion study. Mount Cattlin is an operating lithium mine to the south of us, and we used those parameters to come up with two pit shells. We've chosen one at $1,500 per tonne SE6 concentrate, and other one at $2,500. And the reason why we the reason why we use those is because that's basically industry examples of what are currently being used in feasibility studies, and we believe that at least 1,500 is what needs to be for an incentive to actually get another mine up and running. Burmeister is a significant hard rock lithium deposit on its own, but we also have other prospects. Importantly, it's a stacked pegmatite system. So how is that important? Well, that basically brings down your stripping ratio when you're dealing with fairly flat pegmatites. So and that has actually helped along Burmeister enormously, as you can see from the pit shells that have been derived, and I'll talk more about that in a minute. So as a potential standalone size and grade, typically the lithium pegmatite operations have a plant at around between 1 million tonne per annum and up to 4 million tonne per annum. If you've got a 1 million tonne per annum plant, then you've basically got a 20-year mine life if you're basing it on a Burmeister deposit. So it doesn't need to be 100 million tonnes. 20 million tonnes is fine for a start. There's more to be found in the region, and that'll just add to the whole story. We rank high in Burmeister compared against other hard rock lithium projects. So I've got a table in the appendix that I'll show you at the end, which basically ranks us at, if we had a resource on it, defined that it would be number 9 in Australia in terms of size and grade. Some of our best drill intercepts from our recent drilling, you can see there we're getting over 20 metre intercepts at well over 1%, which is basically driving the pit shells down, but to the base of the existing pegmatites that we've defined. They're high grades, it's consistent mineralisation. In that regard, it's quite unusual. Normally with lithium pegmatites, they're highly differentiated, and you'll get even blank areas within your pegmatite where you won't get any grade. We don't see that at Burmeister at all. It's very consistently mineralised throughout with spodumene. We have very low levels of any other lithium-bearing minerals. So that is also a plus for the deposit. So this is a long section through Burmeister, and as you can see there, the pit shells really do go right to the bottom of the pegmatites. So that gives us a lot of encouragement for deeper drilling as well. But as you can see, the spacing there as well, so that's currently on 200 metres. We're going to close that up to 100 metres by 100 metres for our first inferred resource. And that won't cost us a lot to get there either, around about $1.5 million to do that. basically because we're drilling flat pegmatites and we're going to stick to the defined pit shells to guide us on our drill depths. It also helps to have the odd fault in there, which pushes your pegmatites up to the higher levels as well. And we've got a couple of those coming in on the pits as well. To help us with defining those, we've recently conducted a seismic survey, and that's been run across Burmeister and also across our adjacent Jägermeister prospect to the east. That's currently getting processed now, and we hope to get the results for that in the next couple of weeks. And that should definitely show us where our faults are, and we're hoping that it will also show us exactly where our extensions to our pegmatites are as well at depth. So basically, yep, at the moment it's open, up dip, down dip and along strike, and we've got our infill drilling will definitely define us an easy win for our inferred resource coming up. Just on the mineralogy, so as I said before, spodumene is our dominant mineralisation. In fact, it's almost our only lithium mineralisation, and that's what you want when you're dealing with a pegmatite. You don't want too many other extraneous lithium mineralogies in there, because that means you've got to remove them in the circuit and put them into a different concentrate. It's simple mineralogy, so we're hoping that translates into simple metallurgy as well. We've currently got core samples in at IMO labs in Perth, which we're doing cytometallurgy tests on. What the cyto test will do is actually run through the full gamut of what we can do for metallurgy on our deposit, and then out of that we'll pick a flow sheet which we can go forward with other tests, more lock cycle test work and stuff like that going forward. So onto our upside. So Jägermeister, the Jägermeister prospect shown here, it's just to the east of Burmeister. You can see we've got a pit outline there for Burmeister, just to show the relative scale. Our main targets there are target A and target B towards the top there. And you can see there, the soil anomalies there are of an order of magnitude larger than the soil anomaly for Burmeister. Take that as you will, but we're hopeful that we can get at least repeats of Burmeister at target A and target B in Jägermeister, and that will add further to our projects. So with drilling POWs for that, programs of work are currently in train at the moment, which they should be coming in any day now, but then everyone says that, don't they? We've got everything that we need to do in terms of surveys and everything else done. We're just waiting for the department to give us the go-ahead, including our Aboriginal surveys as well have been completed. And as I mentioned before, seismic field work, that'll also help us with our planning as well. We're very flexible in our drill planning, so we basically make sure that we can target and move around as much as we can, depending on the information that we get coming forward. So we've also got some other tenements around. So Taylor Rocks is a recently granted tenement. We haven't even been out there yet. It was an opportunistic pegging, and Rio Tinto's tenements border that. So we're keen to get out there. Tay prospect to the south. Unfortunately, that's been had a bit of neglect since we've done got the Burmeister discovery, but we'll be getting into that as well later on in the year. And we have other strategic applications up towards Poseidon's nickel plant further to the north. Just some pictures of our drill rigs in action. So basically the key investment drivers, as I said before, I think we're the probably one of the cheapest lithium stocks on the market that's actually got a deposit. We've got an exploration strategy that works. Sure, lithium in soils probably doesn't work in every area, but it certainly does in our area. We've proven that with our drilling. We've got growth going forward with our Jägermeister prospects as well. We've got a very experienced team as well, and
everything's working out well with them at the moment. They're keen to get in and start do some more drilling. They're keen to look at our other prospects as well. And we have cash in the bank. We've got $9 million. We really don't need to go out to market anytime soon. And just to finish off, this is the table I was talking about before, where we've slotted ourselves in there at number 9. Significantly with this is, so this is based on lithium carbonate equivalent. Significantly there, everything above us is either in production, or it's in construction, or it's got a DFS underway. And there's a few underneath us as well that are in production and have at least studies underway as well. So we believe we're undervalued by a long shot, and we're hoping to prove that more as we go along with our next drilling campaigns, and proving Burmeister up to our first resource. Okay, thank you everyone.
Thank you for being here. Yeah, it's been a big couple of months for us, and we've actually gone into a trading halt this morning for some results that came in late last night. So unfortunately, I can't talk about those, but watch for that story tomorrow. Just quickly, corporate overview. We've got a small but very, very active and good board, work very hard and cross lots of different regimes, which is just wonderful. Very strong shareholding, good support from our major shareholders. We've only been listed for a couple of years, just gone through that, and a good set of assets. Mount Isa in Queensland, very large, 1,000 square kilometre copper play with good gold backup. Rare earths, lithium project in WA, and Owakuri, an advanced gold project in New Zealand. But what we're really going to talk about today is our recent acquisition of the Hillgrove gold antimony mine. It's a great time to be in gold, as we all know. It's also an excellent time to be in antimony. It's at a record price at the moment, and its use in particularly solar panels is increasing exponentially. So let's move on to Hillgrove first of all. The best thing about this is that it is an advanced project. It was a mine. It operated very efficiently for 30 years as an antimony operation. Went into care and maintenance in 2005 due to very low antimony prices at the time, somewhere circa 1,500 US. It's now at 15,000 US. It operated purely as antimony. It had some very good gold credits. Most of that gold went straight out to the tails dam because it wasn't a focus. Therefore, the tails dam from that period actually runs 1.6 grams gold, which is a higher grade than most West Australian gold deposits. We will be looking at maximising both gold and antimony from production from that, so we'll be getting the benefit of both prices. It's 1.4 million ounces at 6.1 grams per tonne equivalent. Very high grade, very robust. 65% of that is sitting in measured and indicated. That will be moving towards a reserve which should be out within the next month or so. We're extremely well advanced on that. We're just waiting for a bit of final metallurgy to be able to tick that box and get our first reserve out on the project. We've got a lot of infrastructure on site. There's been $120 million invested in the project so far on underground development. We can drive down the decline into the ore body. The metallurgy that we're doing at the moment isn't from core. We actually go down and take 1 tonne bulk samples from the ore body itself, so we've got a much better handle on what's going on. We've got a process plant that currently runs at about 200,000 tonnes per annum, and we've just put out a study showing that we can very easily double that to 500,000 tonnes per annum with not a great cost. That plant ran last in 2022, doing predominantly gold and low-grade gold. So it works, and it works very well. It's a good tenement package, 250 odd square kilometres. Importantly, as part of our funding package to move this project into production, we've just secured an offtake from Wogan, who are one of the world's larger antimony specialist traders, and they and Excelsior are doing final DD at the moment. The guys are on site only last week, doing their due diligence there to come in for a non-dilutionary circa 13 Oz funding package to allow us to move the project forward. So to bring in an off-taker at this point who's specialist in antimony, they see the benefit of the program that we've put together. They see the price at the moment, and they want to be involved. So that's a pretty good tick for us, and it also means that we can move through to BFS and financing without going back to the market. There's that resource, measured and indicated. It's a great number, and nearly best part of 1 million ounces sitting there in measured and indicated. We look forward to moving that forward. It'll probably be the normal sort of 60% of that will move in initially. We've started the program of starting to move inferred up, so there's a lot of inferred in the system, and we'll show you the potential of the field. We've recently completed a drill program at the Bakers Creek mineralisation. This is one of the deeper areas in the field. As I say, we've just gone into a trading halt on this. We had released previously that there was visible gold, so we were expecting some pretty good numbers, and it's fair to say that that has been the case. The potential of this zone, and where we need to look at where that measured indicator is currently sitting is in these areas here. We have a decline in. This area is largely developed, so we can access the ore body. There's no risk getting in there. The decline's in excellent condition, and we can get producing pretty well. So that's where our measured is sitting at the moment. There's inferred higher up here. There's a little bit of inferred further down. What we really see is the upside of this field, similar to what you're seeing at Costerfield and Fosterville and other places with a very similar sort of gold antimony system, is that these zones go to depth, and as they go to depth, they get better. Drilling in 2022 came up with 4.5 metres at 29 and some very high-grade hits in this area here. We've just infilled this and extended this down, and you'll be able to see those results tomorrow. I think we have quite clearly, will be able to show that that mineralisation goes to depth. That also means that these zones here that haven't been touched at all have the potential to extend down as well. So I think the potential upside for the project as we move forward is very, very good, and we're only seeing upside from where we're sitting at the moment. Just talking about where the development is, this is a schematic, so with the 3D orientations it gets a bit tricky in areas. Basically, portal comes in here. This is already developed. This area has all ready to go. We've got all ready to go up in this area. So best part of 12 months production, they're ready to go straight into some very good mineralisation. If you have a look at some of our releases on the samples that we've taken across drives to test work, not uncommon to see up to 2 ounce type material in that feed source. So there's a lot of work already been done here that we can benefit of. And, you know, we're sourcing critical minerals. There's a huge focus on critical minerals, as everybody knows. We've talked to both state and federal government on this. There's a huge amount of interest. This project is mentioned in all of the New South Wales government spin, if you like, that's coming out about critical minerals. So they see this as a project that they want to help move forward, and certainly the response that we've got from them has been very, very good. So where are we? We're completing metallurgy at the moment. This is always a slow process, unfortunately. The one thing that metallurgy tells you is to do more metallurgy. Unfortunately, with delays in laboratories in between, it takes a little bit longer than what you'd like. But that test work now is about 80% complete. We already have a very, very good understanding of what the process plant can do and has done previously. Recoveries for gold and antimony have always been in the 90s. lower end of the 90s. We believe that we can tweak that a bit with modern methods and revving things up a bit. So the test work that we're doing is helping to add incrementally to those recoveries. So we won't see big leaps, but we hope to pick up another 2 or 3%. As soon as we've got that metallurgy, we can build that into our reserve model and move forward. We've completed an underground mining study. That's near finalisation. We're waiting on a little bit of more geotechnical input into that, but that's happening as we speak. The plant upgrade study was released the other week, so we can double the capacity of the plant really by just adding a few bits of equipment, including a secondary crusher and a regrind mill. This is going to produce a much better flow through the plant and remove some of the issues that they had previously with it and make the whole thing a lot more stable, plus the capacity will be double. Our reserve will be coming out very shortly, as we talked about. That will feed directly into pre-feasibility. Because we're so advanced with this project, we know so much about it, we can drive into the ore body, we can walk around the plant. Our feasibility will move forward very quickly into a bankable and then financing and commencing mining, and we hope to get that happening as soon as we can. Looking at the plant itself, the study, as I say, has been completed. It's easy to double. You can see what we've got to do there. We've got to add another ore bin and add a few bits and pieces. Nothing severe. It's a pretty simple job, really, and it's not going to cost too much in the great scheme of things. The replacement value of this plant is probably somewhere circa 200 million and would take you a year to build. We don't have to do any of that. We've already shown from met test work that we can produce particularly high-grade concentrate, very clean. This was something that couldn't have been done before. It's using new technology, but it's unbelievably simplistic technology, all based on gravity, which we all know about, so that works pretty well. And that'll give us a concentrate in the very, very high hundreds, even up to 200 grams per tonne in some cases. So that's a huge bonus, and it's a very clean concentrate. So we're starting on the antimony concentrate as well now to tidy that up, and we think that we should be able to do that as well, so that'll be interesting. We're seeing a lot of free gold, so about 40% of the gold from this project comes out through the gravity circuit. That's a new addition to the plant as well. It's been shown to work extremely well, and that takes a lot of the pressure off the flotation circuit, and we produce gold doré on site, or gold bars on site, so that helps a huge amount as well. We talked briefly on the Bakers Creek drilling. That's a 2,000 metre program that we've just completed. The results, as I say, will be out tomorrow on that. They came in about 9 o'clock last night, which was a shame they didn't come in last week, or we'd be able to mention them. But that certainly shows that there is free gold. We announced that. The zones extend to depth. The potential to push these zones down, as you're seeing in places like Fosterville, is very, very good. This mineralisation comes from depth, and because of the temperatures and pressures deeper down, you tend to get a better gold deposition happening down there. Underground, we're looking at potential incremental process benefits from the underground mineralisation. That test work is nearing completion. We'll be able to move that on. The tailing storage facility that's there, the historic one, it's interesting. We don't have a huge amount of focus on it at the moment, but we are doing a bit of test work there. We've got 1.5 million tonnes at 1.6 grams. That will be retreated in one way or another moving forward. There's a lot of antimony in there. There's also some pretty sizable amounts of tungsten sitting in there, which is $50,000 odd a tonne at the moment as well. So all of that's looking pretty good. That work is going on. On the process plant, the upgrade optimisation is nearing completion. The costing is done, and we're just moving all studies forward basically as we speak. Exploration upside just keeps on giving. There's some of the previous results. Some of those will be replicated. Some of them will be considerably better than that. And as I say, come and see us tomorrow and we'll be able to show you what that is. Very briefly on our other projects, Mount Isa, field team's going out tomorrow. This is the first time we've been able to get on site this year. The rainfall up there has been pretty spectacular over the last couple of years. We would have needed a boat to get on site a few weeks ago, but the roads were open last week. So our field teams are going back into Isa and they'll be doing follow-up geophysics and drilling out there. Rare earth project, very, very interesting, and we'll be advancing that moving forward. We've got some very interesting results on that were released, but certainly our major focus at the moment on Hillgrove. And Owakuri, a project that we drilled last year. Some very, very interesting results. There's a huge amount of low-grade mineralisation in this area, and we're still trying to find the source of where that's come from. There's been about 10,000 metres of drilling done on the project so far. That's an interesting one to follow up as we move forward. Thank you.
Thanks, Chrissy. Let's pick up the energy into morning tea. A little bit of a change in my presentation today. It's exciting to come here and listen to people exploring and hear about battery metals and forward-focused things. I'm hoping that there's some people in here who are here looking for an investment. And you might not think you are. You might be one of my peers waiting to present. The good news is I'm going to give the opportunity to make some money. Last year I was here, we were 23 cents. We're up about 30%. We're trading at 30.5. I think that's just the lemon next to the pie in terms of the opportunity about Fenix. The first thing to point out is we actually dig rocks up and sell them for money. We're not exploring, we're not trying to do something. We did that a while ago. We built a mine and now we're about to transform the Midwest. And you're right, Chrissy, it's very exciting. Big change in our business from last year. Fenix Resources had the Iron Ridge project. We commissioned that mine and built it. In the last 12 months, we've really developed 3 pillars to our business. We're a mining company. It's where we started. We develop and unlock the value in stranded resources in the Midwest. I'm about to show you what that looks like. A key part of that is our ability to manage our logistics. It's actually the biggest part of our business. And the third element is based on infrastructure. We have a commanding and highly valuable position at the Port of Geraldton that is unlocking value in our projects, and we believe, and we're already demonstrating, can unlock the value in other people's projects for mutual benefit. Let's go to Iron Ridge and the Midwest. This is just north of Perth. This is our current project map. You can see the Iron Ridge project. That's 500 kilometres from the Port of Geraldton, north of Kew. And we've expanded our portfolio significantly in the last 12 months. We consolidated the ownership of our logistics business, Newhaul. It's now a wholly owned subsidiary of Fenix. We acquired the Midwest infrastructure of Mount Gibson Iron. They're the most successful miner of the Midwest. They mined 50 million tonnes over the last 20 years. And they invested more than $500 million in the Midwest. And we acquired that infrastructure, on-wharf storage facilities, conveyors, access to the rail unloader owned by the Midwest Port Authority. It augments our existing facilities and the only side-tipping truck unloader in Geraldton. It's infrastructure that is irreplaceable, has an insured value of north of $150 million. We also acquired 2 rail sidings, equally irreplaceable, Riverdini to the north, Peringeri to the south. To build those today would cost you more than $50 million if you could. We also acquired the Cheyenne Iron Ore Mine, 15 million tonnes of iron ore resources, a shovel-ready project that Mount Gibson spent $40 million exploring and developing. With that transaction was a $25 million transaction. Mount Gibson have joined us as our largest shareholder at 8%, and we're going to continue their legacy and going to capitalise on those assets. And the third transaction that completes the picture is we acquired a 10 million tonne right to mine from Sinosteel. I see this as the keyhole that unlocks our mining pillar. Sinosteel control 290 million tonnes of direct shipping iron ore in the World Range all around us. The Beebyn W11 project is 20 kilometres away from Iron Ridge, and it gives us the opportunity to replicate the success we've had there. So here's Iron Ridge. Let me talk you through this video. Beautiful ore body, 30 metres thick. It's 65% iron ore. It's one of the highest grade iron ore projects on mainland Australia. We've been incredibly successful at mining this at 1.3 million tonnes per annum. It's a very simple 2-digger operation, 5 trucks. Macca are our mining manager here. They also run the crushing and screening plant. We produce a lump and a fines product, a very high grade, very low impurity iron ore. What a beautiful place to mine. Very clean, very consistent operation. We're halfway through that ore body. It's constrained by heritage. We mine it in partnership with the Wadjuri people. It will deliver another 4 or 5 million tonnes over the next 3 or 4 years, and we're looking forward to, we're doing some exploration drilling at the moment. We think we will have some extensions on what is an incredibly effective ore body. Here's our quad road trains being loaded on the weighbridge at Iron Ridge. We then efficiently and very carefully transport that 500 k's to our facilities at Geraldton. Here's the side tipping unloader that accesses our sheds at the Geraldton port, which allows us to load Panamex, roughly 60,000 tonne boats, and those deliver our iron ore to a range of global customers. We have 2 life of mine offtake partners. 50% of that material goes to China under an offtake with Sinosteel, and we also service a range of customers in Asia under an offtake with Atlas. So that's our existing operation. If there's shareholders here who followed this story, it's been a very consistent track record of achievement. There are a lot of companies here who are exploring and developing and announcing exploration results and feasibility studies. Not a lot of people go backwards and talk about their previous plans. In 2019 and 2020, Fenix published a feasibility study for Iron Ridge. It said that it was going to cost $15 million to develop a 1.3 million tonne per annum mine, and it forecast that our C1 cash costs for that mine would be 85 Australian dollars FOB Geraldton. The split of that $85 was roughly $20 mining, $5 crushing and screening, just under $50 for haulage, 10 cents a tonne kilometre, a bit of a benchmark in the industry, $10 at the port, no G&A. I'm very proud that in our last 2 quarterlies, we've actually delivered less than $80 Australian dollars FOB Geraldton. So 4 years later, we're mining. We delivered the mine within that capital budget, and we've significantly outperformed the proposed FOB costing. We've averaged more than $50 cash flow generation on the 4 million tonnes we've mined to date, and in the last couple of quarters in the prevailing strong iron ore prices, we've averaged close to $100. It's a really profitable operation, and we're looking to do more. I described in the last map the transition from the company we started on the left to the company that's on the right with 3 pillars. Let me take you through our mining assets. We've spoken about Iron Ridge. You can see the ore body there in the pit wall. You can visually mine this. There's not a lot of low grade. Our lump product is 64% and our fines product is 63%. Very sought after by customers, and you saw it on the video. The Beebyn W11 deposit, the 10 million tonne right to mine that we've secured from Sinosteel, 20 kilometres away from Iron Ridge. It's almost an identical opportunity. It's a 20 million tonne ore body. We have a right to mine 10. We're very confident we can extend that with Sinosteel. We're looking forward to demonstrating that to them with success. We've outlined that we're preparing a mining proposal. We're going to publish a feasibility study for this operation in the next quarter. Our expectations are that its metrics will be very similar to Iron Ridge. We're aiming for a 1.5 million tonne per annum operation operating at similar scale. And we'd like to get that operation up and running by the end of the year, and we'll identify that in the feasibility study. So early next year, hopefully we're having 2 operations running side by side and producing close to 3 million tonnes from that complex. The largest capital item here, as it was with Iron Ridge, is extending the sealed road, the 20 kilometres from Iron Ridge to the W11 deposit. couple of other opportunities for production. I mentioned the Shine iron ore mine that we acquired from Mount Gibson. You can see there in this photograph when we say shovel ready, it's literally shovel ready. Mount Gibson commissioned this mine in 2020. They did 3 boats and then put it on care and maintenance when shipping costs spiralled out of control. Their haulage contractor costs were larger than they expected and the iron ore price dipped. We are confident in our ability to hedge the iron ore price. We obviously have a different focus in terms of we own and control our own logistics functions, including fixing our shipping rates. This is a 58% ore body. And we've indicated again that we're going to make a decision and identify to the market our plans for Shine in the current quarter. It does represent an opportunity for a similar scale operation as we have at Iron Ridge and at Beebyn. Twin Peaks is a little different. We're all about unlocking value. This is a private iron ore mine in our neck of the woods. We've acquired 500,000 tonnes at the mine gate for 40 Australian dollars. We completed our first shipment in the last quarter, and that's unlocking value both for Fenix, using our wholly owned logistics train, as well as for 10M, the owner of the Twin Peaks mine. There are a lot of these sort of opportunities, and we're talking to a number of other stranded deposits about how we can help them and make us both money. Our mining ambition, we've got 1 mine at the moment. Stay tuned. When I come here next year, we'll have 2, possibly 3, and maybe even 4 mines up and running. And you can work out how that's going to relate into our revenues and cash flow based on our cost structures. That's our mining business. As I mentioned in the introduction, we're really a mining company, a logistics company masquerading as a miner. We're incredibly proud of the workforce we have in Geraldton and the focus on this business. We achieve costs that are unheard of in the industry. There's not one answer to that. It's a relentless focus across the business. We run it very differently. Long distance bulk haulage is not a unique business. In fact, we're surrounded by competitors in the Midwest and across Western Australia and across Australia. This part of our business is run by my fellow Executive Director, Craig Mitchell. He's the founder of Newhaul. He was also the founder of Mitchell Transport, which was acquired by Toll in 2011 for $140 million. He has a team that have worked with him for 20 years. They're at the cutting edge of what's possible in bulk haulage. If you're in the Midwest, you'll see our 65-metre quad road trains go past you. They're always clean and they're driven by really dedicated modern technology and modern happy drivers. It's a great business. It's more than just haulage. Obviously, it links to our loading and unloading activities as efficiently and effectively. Obviously, at the moment, we're moving iron ore. We've secured 2 third-party customers. Our current run rate through the port is close to 4 million tonnes, 1.3 million tonnes from Fenix, and the additional tonnes are provided by Wiluna Miners, the listed Kufi Limited and the private Gold Valley. And we're also looking to expand into other commodities. A key part of our business is the port. This is the bulk commodity export from the Port of Geraldton. If you're an iron ore, a manganese, a lithium, a spodumene, garnet, silica sands, potash, base metals, you name it, you're trying to ship your product from berth 4 or berth 5 at Geraldton Port. And you can see that we dominate the on-wharf port storage. Sheds 4, Shed 5, Shed 13, they're the only sheds that are connected both to our truck unloader as well as the rail unloader. We have a capacity here to do 10 million tonnes a year. We currently have reserved capacity of 4, which we're using. Stay tuned with how we're going to expand that. Chrissy mentioned in the introduction that we're very active in the local community. I'll come back and talk about our forward plan quickly. There's 110 projects currently doing feasibility studies in the Midwest that if you follow through their plans, they'll have Geraldton as part of their export. We're very interested in that opportunity both for ourselves and for unlocking value. Really quick plan to stay tuned for what's happening with Fenix. We're going to keep mining Iron Ridge profitably. Stay tuned for really impressive full-year numbers. We pay a fully franked dividend based on a generous policy. We're going to identify the time plan, budget and operating parameters of W11, our second mine. We're going to make a decision on Shine. We're going to continue to unlock value from Twin Peaks and others. And we're looking to build a third-party logistics business in the Midwest. The $70 million contract we announced last quarter with Gold Valley, there's a lag on when that flows through into our earnings. We'll start to see that during the current quarter. It's going to be quite exciting. If you're in the Midwest, you'll see Fenix, we're very active. We're a partnership business, not just with the Wodjiri Yamaji, the traditional owners, but with all our contractors and particularly with our staff. And it's a growing cohort. This business is currently representing enormous value. We finished the last quarter with almost $90 million in cash. On a bad month, we add to that with $5 million of cash flow. The enterprise value is moving. I mentioned last year I came here, we were 23 cents. Today we're 30.5 cents. Stay tuned for what will be if you're back here in 12 months' time. I'm at the booth today and tomorrow. Would love to hear anyone who's got any questions and very happy to talk to people about the Fenix story. We're very excited about it. Thank you very much.